Hey guys, how's it going? Welcome back to Midas Markets. Today we're going to be giving you guys an outlook for the markets for 2024. What's going to happen in the next 3 to 6 months? What's likely to happen in the next year? How's the market looking? You know, stay with us, stay tuned, and hopefully you learn something. So, guys, in 2023 and 2024, BlackRock predicts an unlikely chance of a recession. Is that true? Um, yeah, I don't know. A lot of people like to look at BlackRock and the big guys and be like, oh, these guys are, so smart. They have so much money. They always know what they're talking about. But if you look at their historical predictions, they're usually not accurate. Like, if we take a look at this article from 2020, late 2022, they predicted a recession of unlike any other we've ever seen before. It's kind of crazy considering 2023 was one of the best years for the stock market. But you guys might be wondering, how can a fund like BlackRock just be so wrong if they're so smart and they have all this data? And it's just like, did they just make a mistake? It's an unlikely proposition. Most likely, they were looking to buy more shares at a cheaper price. When you look at the stock market, and when you look at what stuff like big money managers say, you have to take it with a grain of salt, because they're not always in the public's best interest. When they say something to the public, their best interests. Their fiduciary duties is to their own funds, so they don't necessarily care about the information that they give to you is 100% accurate. In fact, they would gain benefit if you did exactly what they say most of the times, because they would buy shares at a cheaper price. When the AI run up occurred, they bought shares at a cheaper price from everybody, and pushed the market up to crazy new levels. So let's take a look at what they're saying for 2024. They've pivoted courses, said no recession is likely now for 2024. Now, if we look at the federal funds interest rate history, we know that recession usually comes between 3 and 18 months after the Fed stops hiking rates. That's because it takes a while for this thing called the lag effect to course and make its way through the markets. So, because the high interest rates burden still hasn't been felt yet. A lot of stocks are paying enormous interest rates right now. A lot of stock companies on their debt, and that hasn't been felt yet. But it's starting to. It's going to be felt. It's only a matter of time. Have you been watching the news lately? You understand that a lot of companies have been laying off employees by the thousands, by the boatloads. And that hasn't been felt yet either. So we have that. We have a reduced outlook on spending. We have credit debt at an all-time high. Student loan debt all-time high, and that just started. And the forbearance on that just started. Got taken off moratorium. So student loan borrowers are going to have to start repaying their debt. So that's another negative aspect to the markets. But for the next, don't get me wrong, there is some positive catalyst that we might see another 3 to 6 months. In my opinion, this is not financial advice. Take a look at the disclaimers below. But there's still money coming out of the reverse repo federal facility. It's a facility hosted by the Fed, if you guys don't know, which gives borrowers 5.25% return on their investment, risk-free, coming directly from the Fed, who can print money. So it's the most risk-free investment you can get. But that has steadily started declining since the beginning of beginning of 2023. We've been seeing outflows out of there, almost 4 trillion, and comparative to the market cap of the total SPY or S&P 500 market, which is about 45 billion, 40 billion, around there. So there was about $4 trillion in this facility, and that's slowly been making its way to the market. You saw money coming out of bonds, going into the market, and yeah. So most of this money is probably going to come out in search of investments before it makes its way back into bonds. Because there's only so long this lag effect can take. So I would be wary with what BlackRock says. Next 3 to 6 months, I expect mega caps to continue the trend. Most of them. I don't know. The magnificent, not all the magnificent seven might hold up. We might see some issues with Tesla, with the increased finance rates, and people having less money to buy cars and less spending money in general. It's not it might not be a big issue. It might not be like a huge decline in sales, but it will affect their growth rate, which will affect their ginormous P to E ratio, which could definitely recover. Elon's a smart guy, and he's always thinking of new ways to create revenue, create more earnings. But and I don't doubt Elon can easily jump back up, but he will have his growth rate will be affected in the short to medium term. But I expect the supercharger networks, cost reductions. I expect all this to play a factor in the long term growth outlook for Tesla. So it might have a small decline in the short to medium term, but I don't see this decline lasting more than a year or two before it bounces back probably to all-time highs. Tesla is a stock that's going to be here for a while. They're creating batteries right now. They're mining lithium. They're reducing costs all over the production scale. They're opening new models. They're going to have the new Model 2 probably in a few years. Maybe by 2026, 2027. Have a new Model 2 for $25,000. I believe it. Tesla's the only one that can pull this off because their technology is so good, and they're always reducing costs to that level. But regardless, Netflix is probably going to stay consistent. Nvidia probably might have another quarter or two. Google I think will probably have another good quarter or two. Apple's a strong cash flow machine. Amazon, shouldn't worry about Amazon. Cash flow king. So that's my rundown on the markets. I hope you guys learned something. I'd love to answer any questions you guys have down below. The markets, they're going to be do good for the next few quarters. The problem is that the Fed is not going to lower the rates in time, and they keep saying, it's hard to know who to believe in the markets. You keep saying, oh, we're going to have a soft landing, soft landing, soft landing. Do you guys really think we're going to have a soft landing? We've only had one in history in '94, which was a short rate hike cycle, and it's impossible to have another short, especially not right now. The Fed seems to be on a mission right now. They want to hold rates longer for higher, and they're not going to be quick enough to lower the rates. So it's just common sense. You don't have to, read every CNN article, which is full of BS from guys that are trying to, stay one step ahead of the general public for their own gains. Yeah. Just know, some safe haven assets like gold will probably do very well in the next 1 to 2 years. Gold, Bitcoin. I can see Bitcoin staying pretty strong in the next few years. And the way I'm not really too interested. I have my main portfolio set up nice long term, and then I have my trading portfolio set up on credit spreads to take advantage of the volatility of the market. So I do credit spreads. What I've been doing lately is MSTR. I've talked about it in some other videos. I've gotten good returns on that, 20% weekly for the last few weeks. And keep track of the Bitcoin liquidation flows and all that. But that's aside the main point of this video. If you guys want to learn more about the markets, learn more about my trades, what I do, and how I structure long-term portfolios. If you guys want to just get financial education in general, feel free to join my Discord. I'll have the link down below. It's free for the next 3 to 6 months till we get to 1,000 members, and we'll have to start capping and charging because when we're doing trades like these, a significant amount of money can influence the outcome due to a thing called pinning risk, max pain theory. If you guys want to look that up, feel free. I'll explain it in another video. But when it comes to playing the market, long term is always safest. But if you can find an opportunity to make a short term trade, and those are very hard to come by. The best is to catch a trend, but You know, low interest rates, declining, bonds going up higher in value. Those are the best trades you can get. And yeah, if you guys, I hope you guys like, subscribe, stay tuned for more. Let me know what you guys want more videos of in the comments down below. Thank you guys for watching.